Some of the big movers after hours right now, that would include retailers, and Yahoo Finance executive editor Brian Sozzi has a look at some key names. Soz.
Yeah, Josh, it's looking ugly here in the after hours. Walmart stock down over 4%. Amazon stock getting slammed close to 5%. You just lock in on Walmart, for example. This is a company that gets about 70% of its cost of goods sold, aka merchandise, from China. Sure, they have a big grocery business, but a lot of the apparel, sneakers, belts, you name it, they get that stuff from China. And of course, Amazon its marketplace sellers rely on China and the European Union. You heard the reporting there from Jen. European Union going to get slapped with a 20% tariff, China 34%. That could cause marketplace sellers to raise prices pretty soon. That could also mean a demand pullback, potentially not good holiday shopping seasons for both of those names. But I'm holding up my Air Jordan sneaker here, guys, because before this segment, I'm like, where the hell did this sneaker come from? Guess what? It's made in China. And that's why you're seeing Nike shares down over 6% on this news. A lot of pressure on Nike. Now, they have also diversified. They're not alone diversifying into Vietnam. Well, guess what? Vietnam's going to get hit with the tariff of 46%. So all those retail executives that have told me and been very excited about, well, we're moving to Vietnam, we're going to try to save costs. Well, no luck. You rely on Vietnam, you're going to get taxed a lot more. You're probably going to have to push through price increases. This is a big negative development for the apparel, sneaker, and handbag industry, guys. Again, this Nike shoe and pretty much all of them are made in China.
All right, thank you, Sozzi. Appreciate it.
Seeing consumer discretionary leading the losses in after-hours trading here. So we're taking a look at here is the 11 sectors of the S&P 500. Of course, the S&P 500 not itself moving, but we're looking at the red lines here. The red lines mark after-hours action. So that's your energy sector down about 1%. But I want to take a look at the key losses we're seeing. Tech is leading this sell-off after hours right now. Tech sector down over 3%. That's largely being led by a sell-off in the chip sector. So I'm going to take a quick look at semis there as well. You can see Taiwan Semiconductor. We mentioned tariffs coming to Taiwan. Taiwan Semiconductor down 5%. You have NVIDIA down over 4%. Broadcom down over 4%. I'm going to flip back to the sector action here just to highlight a couple more moves we're taking a look at. Again, consumer discretionary, also one of the key sectors selling off right now, down about 3.1%. Of course, consumer discretionary, the home of both Amazon and Tesla, as well as a lot of retail names that will be exposed to tariffs. Going to take a final look just inside the NASDAQ 100 to take a look at the large selling we are seeing right now in those Magnificent Seven names. I see Apple down over 6%. Of course, Apple with a lot of exposure to both Taiwan and China. Then you take a look at Amazon. Amazon down over 5%. Meta down over 4%. Again, NVIDIA, one of those key market leaders, down almost 5%. Looks like it might be an interesting open tomorrow on Wall Street when you see all of these large stocks down this much. That usually does not mean a good open for the major indexes.
You know, Josh, it's interesting because you've been, of course, tracking any number of very high-profile, well-regarded strategists. And as you've been noting in your reporting, we've had a flurry of them come out recently leading up to this event, and they were taking down their targets, right? And what do they often list it was Liberation Day and their worries about tariffs.
And it seems like, Josh, right now the read is this is worse than expected, right? So that was sort of the fear we've been hearing from strategists would be, well, maybe the tariffs might be more than strategists had sort of figured at this point. I know Brett Ryan from Deutsche Bank just offered sort of a similar take to you from an economist perspective. Neil Dutta over at RenMax said he's surprised that this board doesn't look worse. He's wondering if investors right now are sort of hopeful that maybe there's some negotiating going on here. So perhaps there's even more selling in store as we get into tomorrow if we don't hear more about how potential negotiations will play out. Remember, we're still waiting to hear from how other countries are going to respond to the U.S., and that's a key part of this story as well, and something that strategists have been worried about in terms of how it will impact.
Yeah, do they negotiate, retaliate? We'll find out. Josh, thanks so much. Let's get it back out to the White House now as Yahoo Finance's Jennifer Schonberger is standing by with more. Jen.
Hey Josh, for everyone who was wondering whether we would be getting blanketed tariffs or reciprocal tariffs, well, it seems like we got a mix of both, right? The president putting forth the notion of a 10% broad-based tariff, and then layered on top of that is going to be a reciprocal tariff, and that is going to be calculated by using the sum of not just the tariffs, but other non-tariff barriers. So, for instance, currency manipulation, dumping, a VAT, for instance, when it comes to the European Union. Trump cited some examples during his event. For instance, China is calculated to have a 67% rate, but the U.S. will discount that by close to 50%, and so it will end up being an effective rate of 34%. Similarly, with Europe, it's calculated to be 39%, but the U.S. will end up charging 20%. Unclear whether these can be negotiated lower. Senior advisors told reporters on a call that this is not a negotiation. This comes down to national security. Now, this is not the end of the tariffs. We're also told that new tariffs will be coming at some point in the near future under 232 when it comes to lumber and copper. As well, we will see a new tariff regime on semiconductors, pharmaceuticals, and possibly precious minerals as well. And now when it comes to Mexico and Canada, we could also see those tariffs remain in place in terms of the 25% when it comes to fentanyl and border issues. Now, the 10% across the board tariff is expected to kick in at 12:01 a.m. on April 5th, followed by the reciprocal tariff kicking in on April 9th. So giving a little bit of room there perhaps for countries to try to comply. But again, very sweeping, detailed tariffs country by country here from the president, who really hopes that this is a new day for America. He called it a declaration of economic independence for America. Josh?
All right, thank you, Jennifer.
I think it's pretty bad news for markets. When we got the first part of that, which is the universal tariff of 10%, that means all imports to the United States will now get this additional 10% tariff, regardless of what they are, where they come from. That didn't sound that bad, but then the reciprocal tariffs came on, and those numbers are very high. So I can just sort of spitball one case study here with China. So Trump is saying that all imports from China will now face this 34% tariff. So just here's some context for that. So when Trump imposed tariffs on Chinese imports in 2018 and 2019, the tariff rate was between 5% and 25%, and that was only on about half of all imports to the United States. So middle range there, 15%, and only on half. The new tariff rate on Chinese imports is going to be 34% plus 10% on all Chinese imports. So that, to my mind, is 3 to 4 times higher tariff rates just on one country. And then I think it's going to be worse for other countries because Trump did not, in his first term, put any tariffs on Vietnam, for example. It wasn't really on his radar. There were only product-specific categories on imports from the European Union, and now it's going to be all imports from the European Union. We are still trying to sort out what you might call like the stacking scheme here. So, for example, we don't know. Here's what we don't know right now. So Trump has already said there will be new 25% imports on all cars that come into the United States. So what we don't know is that, does that mean, is it 25% plus the 10% baseline, plus if it comes from one of the, whatever the reciprocal, we just don't know this yet. Thank God markets are not open because this is massively confusing right now. But I think this is a negative surprise for markets, and it's not the baseline, it's those reciprocal numbers.
Was it more aggressive than you would have imagined?
I think it's more aggressive than, let me put it this way, Trump means it. I mean, when he says he wants to remake the U.S. economy and he doesn't really care about the collateral damage, I think he means it. And this is evidence that he means it. You know, since Trump took office in January, the sort of prevailing narrative in markets has been he's going to threaten tariffs, but they're not going to end up that bad in the end. He's going to back off. He has now imposed, I think, far steeper tariffs than anybody guessed. And I'm not sure he is going to back off. Now, we talked about this before. There for sure are going to be exemptions. There will be negotiations. Some countries might make concessions, in which case Trump will lower those numbers. But I think they're already starting out a lot higher than people anticipated.